where in the heck you're from. Where are you from? What state? What city? What country? What district? What province? I got traders from all over the world here, so got a really good turnout today, right? We broke the 5,600 mark, so I want to thank all of you and welcome to our Trading Week Ahead broadcast for this week. I'm Ken Calhoun, your host, coming at you live. Not like these morons who say, join a trading webinar. Have you ever been in one of those so-called trading webinars where it's just some cheesy pre-recorded video with some chat box? That's crap. I work my ass off. I do actual real webinars. You know, I'm here live for you with live charts, not these pre-recorded webinar crap that some people do. I think those are horrible. What do you guys think? Anyway, if they can't even be bothered to show up and actually run a real webinar, what does that say about their work ethic and their authenticity? So I work my ass off for you guys. I'm a workaholic. Welcome to my world. I'm extremely successful because I work and I focus and I deliver value first. I learned that from people like Brian Tracy, how to be productive and set goals and achieve them and achieve world dominance. Bum, 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 bum. The force is strong with this one. Learn from my experience. I did almost 5,000 freaking trades this year alone. Who else in the entire trading education industry has done this many trades? Nobody. Ain't nobody. I'm the real deal. Join my live room at tradingopen.com. Winning trade alert of the week was pins. Yesterday, we nailed it. I called along at 26.50 for my members. And again, they get the alerts table with the specific entries posted before the opening bell with specific picks, 5, 6, 7 picks with specific long and short triggers set up before the opening bell. No one else in the industry does that either, okay? So thanks to the hundreds of you who are members. I appreciate your enthusiasm. And this was a pretty epic one from the week before, along at 14.3. Now this is the closest thing to a perfect day trading continuation. This was a gap continuation runner. I gave them the long trigger at 14.30. It ran all the way to 16 plus, right? So you could have done really well with that. All right, well, let's get on with it already. What's going on with their stock market? The S&P broke out, but then it pulled back off a bearish engulfing up here. It briefly held the 50 SMA and then dropped underneath it. Currently, you would want to use the red 50 SMA line as resistance, right? Despite the fact it's green candles, it's going to struggle here near the 50 SMA. It's in a consolidation zone. So it's in a bearish downtrend reversal. So we should be short bias the market next week, right? Despite a little bounce, unless the trend breaks above, say, 2,900, I'm going to stay short bias because we moved up and we had a pullback off the previous high. Now, if you take a look at some great charts, let's take a look at what's going on. These are picks that my swing scans and or small cap scans and or Trading Open members got. ENPH was an outstanding gap continuation runner. Nice range, large green candles, moved up here. Looks healthy if it takes out the next whole number. Which reminds me, if you're looking for breakout triggers, never buy right at the whole number. Always wait till 20 or 30 cents above the whole number. Here's another good one for the small cap traders, DHT, nice consistent play. The number one lesson learned I found in so much experience trading the under $10 stocks is unless you're day trading them, make sure that you're looking for consistency of the previous 2 weeks trend, which is what I picked for my small cap scans members. Well, speaking of which, before I forget, because we're on a tight time frame here, I've got a new webinar designed to introduce a new, like a month-long, no recurring, just a 1 month, 30-day pass, all-in-one kind of all-access pass deal I've got going on that I'm launching for the first time ever. It's a premier service. I'm sure it'll do well. I've got so many hundreds of people registered. Do register if you haven't done so already. I just launched this yesterday. I even put together this graphic yesterday, so it's pretty cool. Anyway, go to trademastery.com/golden ticket with homage to Willy Wonka. Anyway, new trading webinar shows you tips. We're going to look at the upcoming offer that I've got. Plus, we'll look at a midweek top charts review as well. So it's not going to just be some sales pitch. I'm going to give you solid content, actionable intel, right? So do register for that if you've not done so already at trademastery.com. I can delete that now. Golden ticket. All right, next up to bat, we've got AXSM, a nice $23 stock that's been in a nice continuous uptrend. You and I both know that this is a difficult game we play. We're trying to make money in our trades without getting stopped out all the time. One of the keys to success I have found is to make sure that you're looking at consistent charts, like consistent people that are honest and authentic and know what they're doing and they actually work hard. You want charts that work hard for you and trends that are in a good directional volatility play that's likely to keep running up. The only problem with this chart is this candle. Name that candle pattern. And for bonus points, for a golden star, guys and ladies, where would you trail a stop if you're long AXSM? So name that candle pattern and tell me the stop. I'll start doing contests here too. I'll probably start doing what the young guys are doing, is like do hashtag repost on my Instagram or YouTube feeds and enter the contest and all that kind of stuff. So we're going to start doing a lot more with live streaming too, both on YouTube and Instagram. A lot of my younger colleagues like Grace and other people that know what they're doing do a great job of live streaming. So I'm going to be doing some more of that too, just to add a personal touch. Inverted hammer, shooting star, and say 22.6. Wow, all these answers scrolling by. Doji, no, it's not a doji. J-hook, or it is a shooting star. Reverse hammer, topping. Right, Bonnie. Hey, Calvin. Hey, Bob. Hey, Bill. Hey, Damon. Hey, Stan. Hey, Gabriel. Hey, Frenchie. Inverted hammer and 2 ticks below the low. That's correct. That's a good answer. You folks are so smart. I like this, especially those of you who've been with me for a long time. You guys learn. As an educator, it's always encouraging to know that people actually pay attention and hopefully profit. Anyway, that is a shooting star, and somewhere around 22.5 would be, I'd use 22.50, just around 40-50 cents under the low. And if I were long from anywhere in here, I'd be trailing a stop at 22.50. You can always tell the best traders in the house by how tight their stops are, because the thinking in the back of your head is, it's not like you use up all your chances and you can never trade again if it keeps running up to 30 or something. I mean, you know, if I got in long air, I frequently kick myself for selling too soon, but good traders always do. Sell soon, sell often, take the money and run. Because more often, and the 20 years experience I got is, that is the right place to exit. Even though it feels kind of soon, like, I'm going to get out here, really? Yeah, because otherwise you'd get back a lot of profit. You go in here, I'm going to get out here, really? Yeah, because it just consolidates. I get in here, I get out here, really? Yeah, because maybe it drops back down. So it's a wise idea to exit early, exit often, take the money and run, because there's no limit to how many trades you can do. You can always rebuy a new high, right? So not a trade recommendation, but I'll likely hit this puppy at 24.80 or so. It breaks over 24.8. Somewhere north of 24.5, you know, up in this region. I don't want to get faked out by a false breakout within 20 or 30 cents of the shooting star high. So wait a bit. Conservative trigger would be, say, 25.20. When in doubt, wait until it gets above the nearest whole number. And that's a good intelligent strategy. So 25.20, not a trade recommendation, but that might be a good entry. Now Aris, this one also has a shooting star, troublesome upper shadows. Long trigger would be up here. Sell stop order would be under, say, a 2-day low. Somewhere like 25.40 would be fine. Another pick that my members got. Legg Mason is one that I'd mentioned last week, and that was one of my members only picks. We have a hammer at the bottom, but unless we can get in a time machine and go back there, that knowledge isn't going to help us. What we need to do as traders is figure out a game plan for the hard right edge, as Alan would say, the upper right portion of the chart. So anyway, that's a great chart because of the recent buying. I'm sure we had a couple of selling candles here, but because of this recent buying pressure, it puts it on my radar. It's in play, and I'd wait for a new high breakout. But that's another good example of the type of chart that my members and traders are taught how to trade, because the range is spectacular. It's what, 27 to 37, about a 10-point range on a $30 instrument. That'll play. So always evaluate visually the range. That's more important than anything anything over here. This is a lot more important. Remember, you want to become a math-based, P&L-based trader, not just a visual chart pattern trader, because unless you figured out a way to go back in time, the value and the benefit of technical analysis is to look for patterns and likelihood of what's going to happen next on the right side based on previous price action. So you're doing price action projection. You're looking at, okay, if it goes up and it pulls back and it goes up again, but then it's still only doing so on, say, a lighter volume, then you might get a false breakout. If it's doing that on heavier volume, it may well continue. Or it gaps up, and you know from experience the gaps usually continue eventually. Here's a good example of a gap that continued, a gap that continued, a gap that continued, a gap that continued. We see patterns, and as smart active traders, you're looking for opportunities to profit from those and to capitalize on those as much as you can. So anyway, let me put on my coach's cap. What do you guys, any questions you've got for me? Let me know. Let me do a quick sector scan too and see what's going on. I don't think there's any really strong outlier sectors. Gold's down. Our VIX spiked, but it pulled back down. Banking and finance have not been spectacular lately. All the sectors are kind of in a state of early summer malaise. So for that reason, they're not doing a whole lot. So what you want to look for is spectacular sector growth that's in the upper right corner of the chart. Without that guidance, without any specific, biotechs are down in the muck. Insurance had been strong. No, it's still pretty good. Semiconductors were selling down for the last couple of weeks. So that's why I'm trading, and we'll be getting back in. I had been trading SOXS, and I'll get back into that one. Anyway, so there aren't any really good sectors out there. So this is very much a cherry-picking market where you've really got to focus your energy, at least what I do in my own trades, is on spectacular recent running breakout charts with large green candles. So normally I don't wear baseball caps. Normally I wear fedoras because I'm a cool jazz cat. I play tenor sax. I like fedoras. I'm a Frank Sinatra fan. I don't know who else out there likes Frank, but Sinatra is my favorite singer in the world, favorite guy singer, and Sade is my favorite lady singer. So for what it's worth, I like the world's best. Hey Bill, when I say continuing gradual runner like AXSM, when is above the moving averages too far above? No such thing. As long as they stay, this is the classic best pattern in the entire trading industry. Uncrossed moving average lines. That's the main thing to look for, is whether or not the moving average lines have crisscrossed back and forth like the one we just looked at did. This one, because it had a history of troublesome selling that finally broke, and we got this golden cross here with the 50 breaking the 200 to the upside. That's called a golden cross. That's good. That's a long signal right there. How much money could you make had you taken that? I teach the world's traders how to do this the intelligent, correct way. But to ask the question, when is it too far above? Remember, I used to be a corporate statistician for the Ford Motor Company. I'm a brilliant numbers guy. The moving averages are just derived from the data point generated by the price action in the instrument and the underlying. So as long as everything is headed upwards, we're in good shape. So I wouldn't be worried about it. I understand your point. I wouldn't be worried about it gapping up or being extended up here too high. The main thing to look at is, does it take out new price action highs? But yeah, smart question. Oh, thanks, Andy, about the tip for LabD. Yeah. Yeah, Bill's saying play that sax a few notes. I would. I was thinking about that last night, but we got a little Shih Tzu, and she goes ape stuff if I play tenor. She doesn't mind if I play my alto, but I'm playing tenor mostly now, or my soprano. The soprano and the tenor she hates. So she doesn't like things in the key of B flat. But E flat alto, she doesn't mind. But I want to, yeah, it'd be fine playing my tenor. Well, go to tradingjazz.com, www.tradingjazz.com. And that's like a one-page site that embeds a lot of my YouTube videos, playing tenor sax. So it's kind of fun. I'm playing Uptown Funk. I'm creating a new song called, it's like Traders Funk instead, and it's kind of funny. And playing a lot of stuff out there. I haven't had too much time to play music. Hey, Miljenko, what's a good put credit spread candidate right now? I don't have any for you. Does price matter? Let's see. Don's asking, hey, Don, does price matter on the gap up continuations, like stocks over 15 or 20? Yeah, it always matters. I have what's called a 10% rule. I got a few minutes left. If you ever got my downloadable course called How to Trade Gaps, and it's available now for instant download at trademastery.com. You can get my downloadable video courses. There's a link in the menu at the top. Anyway, the 10% rule. So something gaps over 10% of its price, I tend to be more conservative and do lighter share size. So if it's a $20 stock that gaps up 5 points, it may well do a gap fill instead of a gap continuation. If it's a $20 stock that gaps up to but no more than 2 points, 10% of 20, then it's likely to continue up, especially if you have a bullish cup or an ascending triangle or just a straight directional uptrend. Yeah, smart question. Thanks. 10% or so above. So if it's a $30 stock and it gaps up to 32, I'm good to buy a new high. But if it's a $30 stock that gaps up to 35, not so much. And that's based on thousands of real money gap trades that I've done. So yeah, Judy's right. Yeah. Hey, Bill. Right, Mukesh. Yeah, stats using quality control, so it's easy to apply for stock markets. Hey, sure thing, Don. Yeah, New York, New York. I like Night and Day. Night and Day is my favorite song. I used to sing that with clients all over Asia and Hawaii and everything in karaoke. It's fun going to karaoke bars in Asia with your clients. Tons of fun. I won't talk about the kind of fun, but it's a lot of fun to go to karaoke bars. Back when I used to be a consultant for big companies, it's a wild life out there. A little too wild for my liking. I'm kind of conservative guy, so I like to be settled, the wife and kids and family, and I'm more suited to that kind of life than the wild life, but I've done it all. Hey, Ahmed is asking, hey, Ken, you're so good as a day trader. What's one best thing in day trading? Small stops. That's it. Life experience, millions of dollars, teeny tiny, itty bitty, tight stops. I would much rather a million times trade, take 10 $20 stops than one $200 stops. Because law of large numbers. I'm giving myself that many chances to get something right and scale into the ones that work out, like I've been doing last week. It's always small stops, undoubtedly. Hey, Hergen, it's good to hear. I like Frank too. Can I comment on oil and gas sector? It hasn't been doing much. I haven't been trading. I like UWT has been up. It's been bouncing a bit. It had ran up and then it sold down and is trying to get its bounce on. So I trade UWT for crude, right? That's what I trade. I used to trade UCO, USO, OIH, and oil. I used to trade a lot, but now I just trade UWT, mostly day trading. But it's not convincingly strong. It's finding support here, and those data points are forming this. And by the way, the 50 SMA, remember, it's derived from the data points of the price action bars or candles of each day. It's not like somebody magically drew a 50 SMA line. It's derived from, it's calculated from the data points that make this up, kind of like a mean reversion pattern. So, but I don't see any particular compelling strength in it. So I'm not swing trading it. What I do like is the SOXS instrument. But I like charts that have especially good strength. Now here's a good example of the gap reversal. The pins that I told everybody the long in my live room, I called it right here, 26.5. Now notice, please, to get to the traders, and we're going to wrap up here because I've got swing scans in a few minutes with even better picks. I have much better charts and swing scans than the stuff I give away free to so many of you, but I appreciate y'all being here. We're still holding steady. At least we broke the 5,600 mark, so thanks to all of you for being here. And this funky character, they're changing the interface. That's like an optional. You can click on that and change the interface. They're forcing the change of the interface Wednesday, so the GoToWebinar interface and everything will look different for everyone in the world starting Wednesday. I've been over a 10-year full-time customer of GoToWebinar happily since I'm on my 11th year with them. Anyway, thanks to the 5,614 of y'all. So anyway, the point is, do you see how this gap was more than 10%? This is a $30 stock that got more than 3 points. 31 minus 3 yields 28. It did a 20% gap, and therefore a gap fill was called for. One of the industry's foremost experts in gap trading. It's my favorite way to trade. Or as my colleague Steve Nissen would call them, windows in candlestick terminology. Also his favorite pattern. Any good professional, genuine, authentic professional trades gaps, but you don't trade gaps in the cheap, horrible stocks. You trade gaps with things that actually have multi-point trade potential, of which you can get 50 or 80 cents. Not a $3 stock that you got to grind out thousands of shares to scalp a nickel or a dime or some foolishness like that. Makes much more sense to trade stocks with wide ranges, with easy to trade, potentially very profitable trade setups that do well for us. So I think that'll wrap us up. Hey, thanks, Damon. Thanks, another great session. Have a good weekend. You too. Thanks, everybody, for being here. I appreciate it.